Good evening, everyone. I'm Shikha Pandey from Kirin Advisors. Welcome to the roadshow of Alpine Texworld Limited. Today, we will provide a brief overview of the company and its innovative business model. Alpine Texworld Limited company engaged in the manufacturing of cotton yarn and grey fabric through its integrated spinning and weaving operations. The company also provides yarn sizing services and undertakes its manufacturing operations through its manufacturing facilities located in Ahmedabad and Gujarat. From the management team, we have with us Mr. Sumit Agarwal, promoter, non-executive, non-independent director of the company. Good evening and welcome, sir. We have with us Mr. Hardik Soni, Chief Financial Officer of the company. Good evening and welcome, sir.
Good evening, ma'am.
Also, we have from Merchant Banking team of D&A Financial Services Private Limited, Mr. Deepak Sangvi, Director of the company. Good evening and welcome, sir.
Good evening.
We have with us Mr. Priyaranjan, sir, Vice President of the company. Good evening and welcome, sir. So let's now start with the company presentation. I'll hand over the presentation to Sumit, sir. Over to you, sir.
Slowly, I'll just give you a brief explanation about the company. This company was incorporated in 2016 and we started our first production facility in 2017. So we started and then we did an expansion in 2018 also. Afterwards, that time we started sizing of the yarn and we started weaving of the grey fabric. And in 2022, again, we expanded into the weaving capacity. In 2025, then we went backward integration and we started a yarn manufacturing facility. And in 2026, we are coming with this IPO. And in this IPO, there is a small expansion also for the weaving capacity. So myself is the promoter of the company and Sandeep Pai is also one of the promoters of the company. And he's also CMD of the company. And for the financials, I think Hardik will tell more about the financials.
Yes. So, good evening, everyone. Let us start with some key finance factor like metrics and all. Current consolidated turnover of the company, like revenue from the operation, was 3,427.13 million, and company is performing so well. So, EBITDA margin is 474.48 million. Like, and EBITDA in percentage term, if we see, like, it's 13.84%, and PAT was 217.16 million, and margin was 6.34%, right? Then, like, if we go through the mixer of the revenue mixer, like, it's product wise, we have a basically three part, where majority part is weaving, like we have majority income from the weaving of grey fabric. So it contains more than 90% of our revenue from operation, and like we have a sizing facility as sir told us, and we have some trading portion as well, but it's negligible, like less than 5%.
And we have 3 solar plants also, which takes care of the electricity consumption also.
Next slide, please.
Next. This was discussed.
Next slide. Sanvi, we have to go through this all one by one. So business integrated manufacturing. So we buy basic cotton from the market, and then we convert that cotton into yarn. So that from there we start the manufacturing process, and we try to consume maximum production of the yarn manufacturing into the weaving capacity. And for weaving, we have our in-house sizing unit also, so we don't have to go outside for sizing. So whatever yarn we buy from outside, whatever yarn we manufacture inside, so we do the sizing in-house only. And afterwards, then we convert that sizing yarn into weaving into gray fabric. So we try to integrate the yarn manufacturing into weaving manufacturing, gray fabric. And then we outsource also some of the yarn which we don't manufacture inside. And this is totally a B2B uh, model. We supply gray fabric to the dealers, and dealers then take it forward to all over India.
Okay, so this is like we, as sir told us, like we have gray fabric yarn selling and sizing services. We have in-house service, yarn sizing service facility. So our product mixture is, as I told you, weaving, sizing, and from sale of yarns. So basically, let me put some numbers for the product wise and year wise. So it will be better to understand. Like in 24, our standalone turnover was 1,793.26 million, and in 2025 it was a 2000 at consolidated. We acquired the Alpine Couture in 29th October 2025. So from that we have consolidated turnover 2,337.27 million. Then in 26 it was a 3,386.77 million, where in all 3 years we like majority revenue from operation was from sale of the gray, like more than 90% of the revenue from sale of the gray
Revenue come from selling of the gray fabric.
fabric. Yes,
10% which we manufacture yarn and which we don't consume inside, we sell it outside.
sell it outside. Yes. Yes.
So competitive strength, capacity expansion. So competitive strength is, so we are an integrated unit. So we do have advantage over our competitors because we manufacture a yarn also. We do sizing in house and we do weaving in house. Plus, we do have a we do have sister concern companies which are into processing of the fabric also. So we come to know what type of fabric is fabric will be in demand in the coming future or maybe current. So we do have a good idea about the market, and that is why we don't keep much of the stock inside, and we try to sell it like the turnover ratio is very less in our company. So we don't have much of the stock, but because of our knowledge and experience of last 50 years, we are able to sell the fabric very fast. And because of the integration of spinning, sizing, and weaving, our quality and consistency of the quality is way far more capable than competitors. And with this with this IPO, we'll be installing 48 more edge looms.
Basically, we do have a in-house ground-mounted solar that contain 5.4 mega, 5.4 and 3.6 that we have installed in 2025. So this is the one of more major synergy for us. Like this reduce our electricity consumption requirement and our like fuel charges up to less, like 50 or 60% was reduced in 25-26. We have also installed our 2.4 another solar ground mounted unit. So like it will also it just started commencement its operation in 2026. So it will be also be a benefit and advantages for us, like in terms of our operation.
I think next slide. Yeah. So we are concentrating more on the Indian market, and especially Ahmedabad region and surrounding region. So customer wise, we normally supply to the dealers, and then from there onwards, it goes to the customers. So we are not dealing directly with the customers. So we have dealers like for Ahmedabad, for Delhi, for Bombay. We have different dealers who deal with the customers region wise.
So some key financial highlights, like in terms of turnover that I already discussed. In 24 we have standalone 1,844.36 million, and in financial 25 it was 2,376.61 million. Then it increased to 3,500 and 1.79 million. It's like consolidated, and same as increasing trend of EBITDA to PAT. Like EBITDA was 199.6 at standalone in 2024. Then it was 217.25 consolidated level, and in 2026 it was 474.48 million in, and PAT was 48.81 in 2024 at standalone level. Then in 2025 it consolidated it was 86.26 million, and in 2026 it was 217.16 million. And like in terms of we see the percentage. So EBITDA was 10.84 to 11.38, and then it increased to 13.84 in 2026. So there is an incremental trend, and from standalone to consolidated, and consolidated to consolidated. Then in 2024, PAT was 2.66%. Then it was increased in 2025 at 3.63%. Then in 2026, there is a high of 6.34%. So there is an incremental trend in terms of profit after tax at a company at consolidated level. Then let us come to some return on investment, return on equity portion. Like return on equity in 2024 was 12.17%, and in 2025 it was 18.808%. Then in 2020 it was 33.85. Now if we talk about the like return on capital employed, apart from this return on equity, return on capital employed was 12.12% in 2024. Then it increased to slightly movement in like 12.18% in 2025. Then it increased to 17.56 because of synergy and all. Like as I told you, we have ground mounted solar and all. Another, then if we discuss about the debt equity, like debt equity ratio in 2024 at standalone it was 1.8%. In 2025 it was 3.14%, and in 2026 it was 2.30 35%. Yes. And if we talk about the debt service coverage ratio of company, like in it was in 2024 1.17. Then it like in 2025 slide down 1.03, and in 2026 it was 1.55. In terms of times, the debt equity ratio is in terms of times, right? Previous one was in terms of percentage. Like again, we if we come on the working capital requirement, so basically most important is current ratio for the company, because company is basically engaged in the manufacturing concern, and we, as sir told us, that we do not want to make much layover in stock and everything, so we have some fast recovery, so our ratio was good. Like in 2024 it was 1.28 times current ratio. Then in 2025 it was 1.14, and 2026 it was 1.28. So in my opinion it's good. Like another thing is receivable to turnover ratio was in 2024 it was 2.06 in terms of time, and in 2025 it was 2.73. Then in 2026 it was 4.23. So basically, like it's good to in terms of like we have fast recovery. And if we talk about the earning per share for the company, so it was like in FY24 it was 1.86, then in 25 it increased to 3.27, and then at FY26 it was 8.18 consolidated level, right? And NAV, like net asset value per share, it was in 2024 it was 16.23. Then it was in 25 it was slight increase 19.50, and in 2026 it was increased by more than 30 or 41 to 27.79. So basically, these are some highlights of finance that we can verify. Okay,
I
then
think
we have a like good, as well as in terms of cash operation, company as sir told that data's recovery are good for operating profit from 2024 to 2026. It was increasing trend, like in 2024 it was 315.19 million, then it was 130.08, then in 2026 we expedite the process and everything was put efforts, and then we achieved 339.90 in cash flow from operation. Like it's positive, so it's a good impact in terms of finance, because we have not just profit on book, it is something that it reflects our capabilities. And like as you aware of that, company had installed ground mounted solar and spinning unit as well. So in 2024 it was 80.64 cash flow from investing, so it seems that company had invested. And another in 25 it was 945.03 million, and that was because of investment in a spinning unit. And another 323.17 2020, where like we have installed ground mounted solar, and by the end of 26 we were on the installation of phase 2. So like it's also good sign at consolidated, if it's good, like. So
I think the presentation part is done. I think the briefing of the company and the financials. Shikha, I think over to you.
Next.
Thank you so much, Sumit sir and Hadik sir, for the brief presentation of the company. So we'll start with the Q&A session. I request all the participants to post your questions in the comment box.
Uh, uh, Hello everyone. I am Deepak Singhvi from D&A Financial. Now we just go through you to the little bit of issue highlights, issue size and issue details. Now this is a fresh issue, entirely a fresh issue of up to 1 crore 20 lakh 24,000 equity shares of rupees 10 each. The floor price has been fixed. The upper floor price band is 100 to 105. On a upper price band, the amount is up to be collected is around 100, more than 126 crores. The issue is going to open on tomorrow, that is 14th of July 2026, and it will remain open for 3 days and going to be closed on 16th July 2026. This, I already told you that this is the entire issue is of a fresh equity shares and the entire money is going to the company's account. The main, can you take a next slide, please? So this total gross proceed will go into a major component is the what the promoters, Mr. Sumit, has already been told or informed you that this is the additional 48 lakhs, 48 looms which is to be installed. This is the capex, and this has been around 31 crores or 307.11 million rupees. The there are some part is to be going for repayment of the outstanding loan which is borrowing of the company, which is turn amount is 522 million dollars, and the balance is the general corporate purposes. We hope this company which has been doing in the, it's already been said that it is in the weaving and the gray fabrics as well as on the cotton yarn, and therefore we request you to look the things in the manner. As an investor, we hope that will be a good company to invest. Now, thank you very much, and Anjali, I mean, say you can please take forward.
Thank you, sir. Thank you, Deepak sir, for the presentation, and thank you, Sumit sir and Hardik sir, for the presentation. So we'll start the Q&A session now. I request all the participants to post your questions in the comment box. We have a first question from Ms. Pranjali. She is asking, Gujarat is the source of over 97% of your revenue. What specific steps are being taken to mitigate geographic concentration risk?
Sumit ji, unmute, please.
Yes, Sumit, so you're on mute.
So 90% of the revenue is coming from Gujarat because we have set up dealers in Gujarat, in Ahmedabad itself. So all the goods go to them, and then from there they supply to Ahmedabad also, they supply to Ichakan side also, and they supply to Bombay, south also, south of India also. So that's why the revenue, which 97% of the sourcing is from Gujarat, like the revenue sourcing. But indirectly, that goes to all over India.
Thank you,
Yeah.
sir, for the answer. Next question, please. So we have a question from Mr. Kushal Sonane. He is asking, capacity utilization in weaving is currently exceeding 100% with the proposed manufacturing unit 3 be sufficient to handle immediate spillover demand, or is further expansion already required?
I just
Yeah.
answered this question. Now, this proposed manufacturing unit is been there. Now, this is a textile business which has already been told by Mr. Sumit sir, that this is an increasing demand, and the capacity of the requirement of the worldwide is very, very high. So company may look into the future businesses and may grow and make additional investment into their future activities also.
Thank you, sir, for the answer. Next question. Next question is from Mr. Jayesh, sir, that a backward integration into spinning was a major recent move. Does the current spinning capacity fully meet the internal yarn requirements for all weaving units, including the proposed unit 3?
No, no, no. So that is around 25% of the spinning capacity we utilize. The rest we have to source it from outside. The yarn we have to source it from outside. So maybe in the future we'll be adding more spinning capacity so that we can meet the demand inside only.
Thank you. Next question. We have next question from Mr. Prajwal. He is asking, the Alpine Texworld brand is relatively new, formerly Alpine Spinwave. Has this name change impacted customer recognition or assisted in entering new market segments?
The name change was just to give a broader view of the company. Alpine Spinweave was specifically for the weaving unit. Now we are into backward integration also. We have installed solar also. Going future, we can go for forward integration also. That's why Alpine Texworld is like it creates a atmosphere of total integration. That's why we changed the name.
Okay, sir. Thank you. Next question. We have next question from Mr. Padnish. He is asking, the debt to equality ratio stood at 2.35 in financial year 26. What is the target leverage ratio once the IPO funded debt repayment is completed?
Uh, See this. I just take this answer. Now the existing debt ratio is approximately 2.35%. and it has significantly changed the debt equity ratio of the company after the IPO.
Certainly.
And probably it might come below 1.
Below one, yes.
And that will have the company have a better leverage to do that in future. So, so it has been a benefit to company in long, I mean, a lot of way. So that's the answer probably you have to give.
Yes.
Thank you, Deepak sir. Next question. Next question is from Miss Apeksha. She is asking, finance costs jumped by over 68% in the last fiscal year. Was this primarily driven by the scale up of the unit to spinning project?
Yes. Yes, we have sourced a spinning unit with bank funding, so there is an increase in finance costs. But as sir told us, Deepak sir, that after IPO it will be reduced. So there will be also a reduction in the finance cost, right?
Thank you, Adik sir. Next question. Next is from Rishi sir. He is asking, trade receivables decreased in financial year 26 despite revenue growth. What internal credit policy changes led to this improved collection efficiency?
Yes, we have set up some credit policy, like it was improved and currently it is in place. So our debt recovery was fast. So basically we also need some funds for expansion and all. So like it's requirement for day-to-day routine, so we change some certain terms that impact us our data trade receivable ratio as well, right? That very well can identify in our current ratio. It reflects what management actually working for recovery, right?
Thank you. Next question. Next is from Balbir Bagga. He is asking, suppose a key customer negotiates lower prices, can margins still remain resilient?
It all depends from month to month, but we don't want to lose any customer and we want to run at full capacity throughout the year. So sometimes we have to negotiate. But if we have to negotiate with one customer, but there are so many customers who are giving us the regular rates, it hardly affects us. But we never try to lose our customers. We want to keep everybody happy.
Correct. Thank you. Next question. Next is from Bhaskar Pawar. He is asking, if cotton prices rise sharply while yarn prices remain stable, how much pricing flexibility does the business have?
So yeah, when cotton prices rise sharply, so we cannot pass it immediately. So we have to pass it strategically and step by step. But we have that cushioning, and we have a good rapport with all our customers, so they understand the cotton prices, and cotton prices are very transparent. You can watch it daily. So yeah, it takes time, but yeah, we have that much cushion to handle the sudden spike in the cotton prices.
Thank you, Sumit sir. Next question. Next is from Mr. Pavnit Singh. He is asking, during periods of raw material volatility, are margins likely to be protected better than peers?
Yeah, of course, it is better than the peers. We are far ahead from the peers because of our experience and our goodwill. So, and as I told you before, also, if somebody takes our fabric today and the same customer takes fabric after 3 months, also, he'll get the same thing. So, it's all about repetitive business. So, there's nothing to worry about it, about the price and everything.
Thank you. Next question. Next is from Mr. Sudhir Sharma. Recent profit growth has outpaced revenue growth. How sustainable is this trend?
It will be continued.
So, can you repeat it one more?
Sure, sir. So he is asking that recent profit growth has outpaced revenue growth. How sustainable is this trend?
Of course, it is sustainable because in last year we started the spinning unit and we had installed
Solar.
5.4 megawatt. Last year we installed it with the spinning thing, and this year again we have installed 3.6 megawatt. So last year was the first year, and this year it will be a very seasoned year. So of course, in this year also it will be seen. The profitability growth as compared to the revenue growth will be seen in this year also, in the current year also.
Thank you. Next question. Next is from Miss Mansi. She is asking inventory levels increased significantly to 720 million in financial year 26. Is this accumulation purely for the new spinning unit or does it reflect a buildup of finished goods awaiting orders?
No, actually, there's a two thing. Inventory contains three things basically: raw material, work in progress, and finish. So basically, as you can see, sales increase. So we have to keep the inventory because we have a demand on that. So we kept the inventory level at increased so we can meet up the demand in recent financial, right? As well as season is also coming from Diwali and all season are coming, so we have to keep the stock of that material because management was aware of certain changes in price and all, so we keep the stock for that.
Thank you, Aditya. Next question. Next question is from Mr. Hadi. He is asking if customer demand shifts toward premium fabrics. Is the current product portfolio well positioned?
Yeah, we are fully equipped with all the machineries, and we can serve whatever fabric the customer asks from medium quality to the premium fabric, whatever it is.
Okay,
All
sir.
the like from Japan, from Belgium, from Germany, and from Switzerland.
Thank you, sir. Next question. Next is from Harshal Jha. Does the business have pricing power or is it largely a volume driven model?
It is a largely top line based company, a top line based model, but still we, as I've told you before, also it's an integrated unit, so we have the power. We have the power to control the prices also, and we have that much good rapport with the customers that even if there is a sudden spike in the cotton prices, we can pass it on to the customers. Maybe not at once, but maybe in stepwise.
Yeah.
Thank you, sir. Next question. Next is from Kusum Mishra. She is asking can operational efficiencies continue to support margin expansion after the latest expansion?
Yes, definitely.
Hardik,
Yes, it will.
Okay, sir. Next question. Next is from Rinku. She is asking could customer diversification become a key growth level over the medium term?
what is? Can you repeat once more?
Yes, sure, sir. So she is asking that could customer diversification become a key growth level over the medium term?
Right now, we are running at full capacity, so we don't need much of the diversification from the customers. Yeah, with this 48 rooms coming in the future, we can uh, we can experiment a bit with the new customers.
Okay, sir. Next question. So Jnaneshwar is asking what would timeline for expansion? Like what will be the timeline for expansion?
For this 48 rooms, we are targeting by first quarter of next year. I mean
Yeah.
to say like the last quarter of the financial year, of the current
Okay.
financial.
January 27.
Okay. Next question. Mr. Amitabh is asking working capital remains significant. Can it improve meaningfully with scale?
Can say like yes, with increase in production capacity, we have a more power to sell, so it can be improved.
And we are paying off the debt. No?
Mm.
Uh, After this IPO, we are paying a lot of debt back to the bank. So automatically it will improve.
Yes, after this.
Okay, sir. Next question. So Sanjay Patil is asking, will operating cash flows adequately support future growth after IPO proceeds are deployed?
Of course, yes, we are a growing company, and if you see the background, since 2016 onwards, we have been expanding, expanding, and expanding. Only between the COVID time, we just halted for 2 to 3 years. So hopefully, with this reduction of the debt and with this new expansion and with new customer base, hopefully we'll be going for further expansion in the future. It can never stop, and we'll never stop at this point, or maybe in the future. Like we'll go on and on and on.
Yes, sir. Next question. So next is from Mr. Pawan Gupta. He is asking, is return on capital likely to improve after the new capacity becomes operational?
Yes,
Uh,
yes, it
for
will.
ex-
Sorry.
for briefly explain.
Okay. So basically, like after new capacity, like there is an increase in turnover. So there will be like increase in turnover. It will create a profit. So there will be, yes, definitely increase in uh, return on capital as well.
So we will not be requiring new working capital with this expansion.
Hmm.
So I think automatically all the figures will be improved, all the ratios will be.
Okay, sir. Next question. Next is from Mr. Rishi. He is asking, could the new spinning capacity improve supply reliability for the weaving business?
Could the
Sorry.
new spinning unit supply liability?
No, I repeat the question once again. So he is asking that could the new spinning capacity improve supply reliability for the weaving business?
Yeah, yeah, of course. So I told you before also that 50% of the production is being used in-house only, and 50% we try to sell it outside so that we can get the idea what exactly is happening in the yarn market. So we have our suppliers, uh, like we have our designated suppliers, and from which meal we have to buy. So of course, the liability comes down with that, and our reliability and our support level, or what you say, the comfort level with the suppliers is as much the same only.
Thank you, sir. Next question. Next is from Mr. Ravi Sakpal. He is asking that does dependence on a limited supplier base create procurement risk during cotton shortages?
No, we don't have a limited supplier base. We have lot of suppliers for cotton also. We have good supplier range for yarn also. So that is not an issue for our company. To source anything is not at all an issue for the company.
Okay, sir. Next question. Next is from Mr. Padnesh. He is asking, does geographical concentration increase operational risk beyond industry averages?
No, I don't think so, because Ahmedabad itself is a cotton hub, and Ahmedabad itself has so many process houses because our fabric go to the mills, to the process houses. So that is not a concern. Yeah, of course, in coming future, something bad happens in Ahmedabad. So our manufacturing facility is also in Ahmedabad. So it will affect everybody in Ahmedabad, not only our company,
Correct, sir.
because our manufacturing has to be in Ahmedabad only. If something happens to the processing industry, and then we have to supply to India level, so we do supply to India level. I mean, we We have a policy of contributing 25% to other customers so that we have an idea. So we are dependent only 75% on Ahmedabad and surrounding market. For the rest of the thing, it goes India wise.
Yes, sir. Thank
And if
you.
force major is applied, then nobody can be helped out.
Yes, sir. Next question. Next is from Miss Kavita. She is asking, could higher working capital requirements offset earnings growth?
No.
You have a higher, but I think so. We are maintaining at a good level. I don't think so. We
The
have
ratios,
higher,
so we need not to worry about it.
and after this IPO, whatever fund we are getting it, we are paying it back to the bank only. So our ratios will be like one
Will
of the
be
best in the industry.
Okay. Next question. Next is from Mr. Jayesh. He is asking, if customers delay purchases due to inventory corrections, how vulnerable are revenues?
So that is, it happens sometime. It doesn't mean that it doesn't happen. It happens sometime, but that is only for short time. That is, if the customer want to adjust his inventory level, it has to wait. Like it is only for 1 or 2 months maximum. So in India, I think if we talk about the Diwali month and if we talk about the Holi month, apart from that, 10 months are like it's the same. Like we don't have any issue like with the inventory level. Sometimes it happens in a year, but that doesn't affect us because the next month or maybe the third month they take away all the inventories.
Okay, sir. Next question. So next is from Mr. Neeraj Apte. He is asking, can the company maintain growth if textile demand weakens for a few quarters?
So if you talk about the last 2 quarters and if you talk about the competitors, if you see their balance sheet and if you see our balance sheet or our production level or supply level, you can easily get to know that we are maintaining our supply, maintaining our production and supply even in the crisis time also. Even if you talk about the West Asia war, if you talk about the Ukraine war, or if you talk about the tariff war, uh, I think last 1.5 years or maybe last 15 years, if you see our data and if you try to compare with other peers' data, you can easily make the difference. So we are weatherproof or weatherproof.
Okay, sir. Next question. So next is from Mansi. She is asking, does the recent regulatory observation regarding the environmental approvals change the execution outlook for Unit 3?
no.
No, no. So we
Non-polluting.
are in the non-polluting industry.
Yes.
So spinning and weaving is a non-polluting industry. So I don't think so. It is difficult to get
Present.
any environmental approvals or any observation or any new rule coming into the future will not affect us.
Okay, sir. Next question. So next is from Hardeep. Could rising competition compress margins despite capacity expansion?
Yeah, sometimes it can happen maybe because of too much of competition. Sometimes it happens in the market. So at that time, but if we talk about the whole year, then we have time to recover also. But our first priority is to keep the customers. Uh, I mean to say to keep the customers with us only. That is our first priority. If we have the production throughout the year, if we have the capacity utilization throughout the year, then margin is byproduct. So it all comes with that.
Yes, sir. Next question. So next is from Deepak Mehta. He is asking, if profitability grows faster than revenue again, what could be driving that trend?
Like,
What we will be doing in the future with that money?
So he is asking this, if profitability grows faster than revenue again. So, what
Yeah.
could be the driving that trend?
Like, there are synergies first.
So that's what we told you before also that last year we had installed 5.4 megawatt capacity, and this year we have installed 3.6 capacity more, which is operational from 1st of April 2026. So of course that benefit will be reflecting in this current year balance sheet.
Current balance sheet, yes.
Plus last year uh, we had started the spinning unit in March end 2025.
Hmm.
So the first 3 months where like teething issues were there. We were trying to streamline the process and everything. So we lost that 1 quarter. So that benefit we got it for 3 quarters, and this year we'll get it for all the 4 quarters. Plus the solar unit which we started, we'll get the benefit for all the 4 quarters. So I think this year also our profitable growth will be better as compared to the revenue growth.
Thank you, sir, for the answer. Next question. So, Kusum Mishra is asking, does the current expansion materially improve the company's competitive positioning within the textile value chain?
The current expansion will not improve the company's competitive. It will it will improve the top line of the company,
Plan.
and we can cater to different type of customers also. And one of the earlier questions we were talking about premium fabric, so we'll be having more capacity to play with more fabric, and we can cater to more customers.
Thank you, sir. Next question. So, Neeraj sir is saying all the best for the IPO.
Thank you, sir.
Kushal is saying looking forward for the IPO.
Thank you.
Best wishes from Kavita ma'am. So, I think we have covered majority of the questions.
Yeah, I think so.
So we can conclude the roadshow. Before that, thank you Sumit sir, thank you Hardik sir, thank you Deepak sir, thank you Priyaranjan sir, and all the best for the IPO sir to all
Thank
of
you.
you.
Thank you.
Thank you.
Thank you. Thank you.
Thank
Thank
you
you,
sir.
everyone.
Thank you.